We have Natalie on the phone line in Toronto. Good evening.
Hi, good evening, Mark. Thank you so much for taking my call. Mr. Burrows, I'd like to have your opinion about Precision Castparts. Would you recommend buying that stock, and would it be a long-term hold in case you don't feel it's a good buy? Would you recommend another stock in the same space?
Sure.
So I'll hang up and listen. Thank you.
So Natalie, Precision Castparts, for those that don't know, make parts for the aerospace industry. The aerospace industry has been going through a replacement cycle with new plane upgrades. So companies like Boeing have had a pretty good go over the last number of years. Precision Castparts had very, very strong growth because their content per plane was going up. They've seen a deceleration over the last few quarters, and so the stock's down over the last year. This is a stock we owned at one point. At this point, there are some, as I said off the top, some very clear winners in this market. I don't think you have to go fishing around in the stuff that's not working. There's nothing changing there. It's just underperforming and the revenue is decelerated. So if you needed to own something in the space, I think you could take a look at Boeing. Boeing's consolidated over the last 4 months, and I think it's pretty good value. They beat the estimate in the most recent quarter by just about 10%. So their earnings are coming up, and they should be okay. I think that you could look at that.
There's a look at Boeing, which was up today. Now, Precision Castparts peaked in June of 2014. When did you decide to pull the trigger and get out?
Well, so we run stops on all of our positions. And last summer, there was, as I mentioned, there was some rotation in the market. And I can't tell you exactly what price we came out at. But, you know, at the end of the day, you need 20 to 40 names in a portfolio to diversify and get the benefit from that. There's 66,000 public companies. You know, the problem is a good company doesn't mean it's a good stock. In this case, they've seen some deterioration in the financial picture, so this is one that we came out of for that reason.
Okay, here is an email on GameStop. I'd appreciate your opinion of this one over the next 2 to 3 years. Essentially a retailer of games and gaming devices and so on, right?
Right, so we've been a big proponent of consumer discretionary stocks, especially companies that don't require a huge outlay. But as consumers have had a little bit more money, their balance sheets are getting better. The price of gasoline's gone down. You know, they have some money for consumer discretionary. And so we've talked about stocks like Starbucks and Disney and Home Depot. We don't own GameStop. But as a retailer, they're in a good space because there continues to be lots of new titles that are coming out and lots of refreshes of existing titles. I would prefer to own online retail for video, and we'll talk about one today. But stocks just made a new high. There's lots of titles coming. The most recent quarter, they beat by 15%. I'd have no problem owning the stock. I have no problem with retail, no problem with consumer discretionary. The risk is that over time, I think online sales will eat away at a company like GameStop sales.
Okay, you've answered my follow-up question, so I'll move along. No need to ask that one. Lisa's in Toronto. Hi, Lisa.
Hi, thanks so much for taking my call.
Sure.
I'm holding McKesson Group for a while, and I'm just not knowing whether to keep holding it, what the outlook is right now for this holding.
Right.
Please let me know. Thank you.
So a couple things about healthcare as a sector. First of all, healthcare is the biggest industry in the U.S. The second thing you need to know is that it's highly domestically focused. So in the case of McKesson, for instance, you know, of all of their sales, about 80% are U.S.-based sales. So when you look at the U.S., you've got an improving consumer, you've got an aging consumer, and you've got things like Obamacare, which are not hurting the spending on healthcare in the country. So McKesson is a distributor. They also have a PBM, Pharmacy Benefits Management unit, and the company continues to grow. They beat the most recent estimate by about 7%. Doesn't pay much by way of a dividend, but again, this is a sector, the stock's consolidated over the last 3-4 months. Don't let getting bored be a reason to sell a good company. It's not like the market's been running away. The market's been consolidating and pulling back a bit. Stock's held in very, very well relative to the market. I would hold the stock.
And you're in that one?
We do not own the stock.
You do not, okay. Ernie's in Coquitlam, BC. Hi, Ernie.
Hello. Thanks for taking my call.
You're welcome.
I have 2 oil stocks I'm curious about. One is CNQ, but I'm more concerned about Crescent Point Energy. Do you think they're wealthy enough to survive this low oil price setup?
So Ernie, we'll focus on Crescent Point. This is one actually we were talking about at the office today. So obviously the group is under pressure. A lot of people bought energy over the last number of months thinking it's cheap and the oil price has to move higher. Our contention is that with lots of capital available and new technology, very efficient at finding new energy, it's likely that the price deck is going to stay low for quite some time. So hedge funds in particular went double weight the energy sector early this year, and in the last 2 weeks have been throwing in the towel. So I think that there are sellers in the market for energy producers, and that's not going away. In the case of Crescent Point, I think that the risk is we're trading virtually on the lows. The risk is that a lot of people own this for the dividend. And my guess is if for some reason they decide they're going to need to cut this dividend, that it's the prudent thing to do, there's a lot of people who are going to sell their stock. So I think that's the risk. I would avoid the stock. I would avoid the sector. We own a zero weight in energy, and I would expect that's going to be the case for some time here.
We will take a break here with David and then come back with more of your questions.